Greetings traders, hope you're doing well today. It is 8:01 p.m. Central Time here in the US. Make sure I got everything set up properly here. There we go. So here we are, Tuesday, August 29th. First thing I wanted to show you is what happened with the US markets today. Very interesting. Again, this is only sort of our the corny Yahoo Finance that I use, but I just had it. I've used it like this for years. And you can see what's happened. Down beneath my video here, the stock markets, the Dow Jones anyway, was tucked way down in the corner. And it just continued to slowly push up. And if you can see up in the top corner here, it might be a little hard to see. The S&P 500 closed up slightly, the Dow up very slightly, and the NASDAQ up slightly as well. So pretty interesting stuff, I must say. And a lot of that is due to some of the heat coming off of the North Korea incident. So before I show you the charts and what I'm watching, I want to make sure that you're aware of the news coming out in about 27 minutes. This news is coming out of Australia, building approvals month over month, and construction work done quarter over quarter, as well as New Zealand. Governor Wheeler is going to be speaking. The building approval numbers, it seems, now again, I don't live in Australia. I don't know the inside scoop on the whole economy over there, of course, but it seems to me that the Australian numbers should outperform this. Now, I do have a long order, as you may have seen from the trade ideas, that was posted Euro Aussie. But, when we see the estimations down this low for something like building approvals, I just have to assume it's going to outperform. So I'm hoping it doesn't, because if the number comes out bad, that will help my Euro Aussie long trade. Construction work done, that one I'm not too concerned with. Don't know much about it. Governor Wheeler speaking. Let's see, delivered a speech titled Reflections on the Stewardship of the Reserve Bank. So again, I'm not a big follower of the New Zealand currency or the Swiss currency. So I'll leave that up to you on how you're going to trade with any kind of risk tolerance on the New Zealand currency. Let me zoom this out just a little bit. Tomorrow, Wednesday, finally starting to get back into some predictable news here. We have news out of Swiss. We have ADP non-farm employment change coming out of the U.S. in the morning, Central Time, preliminary GDP. We have the crude oil inventories number, which I mentioned yesterday and this morning as well for the U.S. session stream. That I'm not sure if the crude oil inventories, if there's going to be any shortage due to the flooding down in Texas and Louisiana from Hurricane Harvey. Still, levees breaching. It's getting worse there. Really interesting to watch over the news, and my heart goes out to everybody involved with that. Then we have some big news coming out again tomorrow night out of Australia, the private capital expenditure. Thursdays, we have pretty noticeable news coming out of the Canadian dollar GDP. Now, GDP month over month out of Canada is one that I don't follow very well, but obviously that's a huge high impact number. I just don't track that one very much on my own. And then at the same time, we have unemployment claims. Some Chinese news Thursday night that could affect the Australian currency. And then, of course, pound news Friday morning, and then the big U.S. news, non-farm payrolls, the mother of all, average hourly earnings, unemployment rate. And don't forget the ISM comes in about an hour and a half after non-farm payrolls. We have seen that in the past sort of shift the sentiment that non-farm payrolls has provided in the hour and a half following non-farm payroll news. I posted a link or two, I think maybe one link from some news that was coming out, basically just summarizing the different countries' feeling on what's going on in North Korea. Russia saying, we should not do anything. China saying we shouldn't do anything. UN is saying that this is sort of their last warning. If they do anything else, that's it. And the US is saying it's already too late. So, we'll have to see what happens. I think this post here by Forex Street summarized it. I don't know if you can read it here, but it said a whippy overnight market to continue in Tokyo, ? Definitely whippy. So let's take a look at the charts. First of all, the momentum meter. you know, things really have changed quite a bit, haven't they? We see the weakest currency across the board now being the Japanese yen, since the heat has come off the North Korean crisis and the firing of their missiles yesterday. We see the strength coming into the Great British Pound, the Aussie, the Euro, and the New Zealand currency. And the US dollar very mixed, as well as the Canadian dollar. The currency that's dropped the most has been the Swiss franc and the Japanese yen. You can see them way down here at the bottom. And if we pull up to a 4-hour on the momentum meter, we can see the euro is still standing pretty strong way up at the top, and the bottom is the Japanese yen that really dropped off since that news came out. The fastest riser here, you know, possibly the USD. We'll have to see how that pans out. Going out to the daily, we still see the euro at the top and the pound in New Zealand down at the bottom. So euro pound, I want to take a look at that with you, as well as the euro Aussie. Here's the trade that I have in the euro Aussie, the trade idea that I just posted. If I zoom it out just a little, let me switch over to that chart. There we go. This line, and again, this morning I just threw this line up here. This is the line from the trade idea yesterday, or this morning. No, it was overnight, I'm sorry. Asian session yesterday. It was to get a target of 51.50. My target is up higher on the euro Aussie, up near the swing highs around 52.25. I think this might be, now pending this Australian news that's coming out, this could be a rinse and repeat type of trade. You know, there's nothing wrong with buying a pair, taking profit, letting it return, buying it again, and hopefully getting into some type of a channel trade setup. I have two lines down here in the dark, and one is 1.5037, one's 1.5014. And these lines are, let me move over to the left just a little bit. You can see the swing highs that we put in here on this sort of pseudo triple top on the 4-hour back around August 11th to the 14th. That's where this bottom dark line is. The middle, the top dark line was the center of this consolidation zone. So if we draw that in now, right in this area, you can see this consolidation zone that we had. So I'm hoping that price on the euro Aussie stays up above. I do have a fairly large target here for the size stop that I have. So we have roughly a 40 pip stop and about a 90 pip target. And it's over 2 to 1. We'll have to see how things play out. I'm going to do it the same way that I did it yesterday, where if we can get this target or get the price action up in the middle somewhere in this zone, I think it's a good time to pull the stops up, possibly add another order. 51.07 at the top to about 50.80 here at the bottom. So if the price moves up that far on the euro Aussie, I'd feel pretty comfortable pulling the stops up a little bit, controlling the risk. And pending the news that is about to come out here, out of the Aussie and the New Zealand, we'll see if we add any more to this or not. The news could be very negative for Australia, or I'm sorry, very positive out of Australia. Like I mentioned, I think it's worth taking a little heed, a little warning, that building approval number. Previous was positive 10.9. They're expecting negative 5.4. That number could come in a fair amount better than expected, even if it's less than previous, and that could pull this trade right down to its stop. So you have to be aware of that. Be wary of that. I think that I'm going to pop a little quick note on there. I was going to put it on there and then I didn't, but let me put a little note. AUD and NZD news in 20 minutes. Put a little note on the trade idea. Hey, how's it going, Nick? Let's talk about also. Right on, Jenny. Euro Aussie needs a rally above 50.60. Be nice. Then it's game off to the races, right? The top high. Let's see what we think about gold. Gold is a trade that I'm looking to get long in. I'm going to do the same thing that I did yesterday, and that is take a small order. We're going to go a little bit larger here. We're going to go a half lot. Put my stops down beneath at 1304. Gold, I still don't have any reason for this commodity to return other than a regression back into the support levels. And we did have a decent pullback here today, down to about 1305. I put my stops beneath that level. But remember, from what we covered earlier, the targets on gold are, in my opinion anyway, way up to the swing high, 1335, 1337. And we just don't have a lot of resistance here to the upside. There's really nothing standing in the way on gold rising. Silver looks similar to me, but I'm not as excited about it. Now the DXY, earlier today during the US session stream, I talked about this key level. Now this might not be the exact price point on the DXY because I was looking at a weekly chart, but if you can see the dark line down here, 91.84, I'll just throw a little hash mark on here so you can sort of see what the price number is if it's sort of small on your chart. If we look back on the weekly time frame, we can see that same level right here. It's hard to get it exact on these longer term frames. But what we had was a pierce of the DXY, or the US dollar index, beneath that support level and a rejection. So we were expecting to see a retracement of the DXY. And the first level of notable resistance would be the swing low that we put in on August 2nd. And price, as you can see, came right up into that level, and now it has bounced down. So the $1 billion question is, where are we going to go from here? You can see since the U.S. stock market's closed, things have sort of quieted down just a little bit with the DXY. But we'll have to see what happens. I'm avoiding the price of crude and the Canadian dollar mainly because of the flooding in Texas and the refineries and the price of gas and the things that are going on here in the U.S., especially the news about oil and production and oil rigs. So I'm avoiding that. However, the DXY, can be related to that sort of acts of nature, acts of God, if you will. So I think that this bounce in the USD was simply an organic movement. I don't think we're going to change our trend direction. And if you ever forget where you are, just zoom out. This is the daily on the DXY. If I shift my chart over, you can see the trend has been dropping, since the beginning of the year on the DXY. We got pullback, fall, pullback, fall, pullback, fall, consolidation, fall, pullback, fall. And now we bounced off that strong area of support on the weekly time frame. After 91.80s, there's really nothing left until we get all the way down to 89.60s or so. So my feeling is the DXY is still going to be under pressure. We had talked about possibly having an opportunity to reload on long euro positions, euro dollar. Very nice retracement on the euro dollar today. I did not take any trades in the euro USD. But we had a nice retracement, a nice even 100 pips from the top to about where we are now. And if you're a Euro USD bull, it might not be the worst time to get long. I had a couple traders bringing up the pin bar on the euro dollar daily. This is a possible, if you can see that here, this is a possible rejection pattern. Other than that, I think you have to look back at the fundamentals and think about the saying that Andrew uses, the trend is your friend till the bend in the end. Is this the bend in the end? Is that our rejection pattern up there? If we look left to try to get clues out of the market, we see the swing low that was put in here. If we draw a little zone across, you can see right where we were. So this swing low on the euro dollar, euro dollar, it's the most liquid, most highly traded currency pair that there is, but it's just not something I trade a real lot. This was put in July of 2012. So the euro dollar, aside from this hard fall that it's had, and it fell through this price area here, and I know my chart's sort of small, but possibly you can see that. Right where this wick is, where this gray line is, you can see the impulsivity as the support broke on the way down for the euro. And that was back in 2014. So aside from this fall going back upwards, this is the highest the euro dollar has been, for 5 years. Is it overextended to the upside? Is this sort of a little beacon on top that's telling us the game is over? It's a touchy area. I don't like to buy currency pairs when they're getting rejected at the not all-time highs, but the multi-year highs, when they coincide with an area of resistance on the longer-term charts. And that's exactly what we have right now. So what I'd be more prone to do is look at a cross, like the Euro Aussie, for example, or the Euro Pound. Now, this Euro Aussie trade's got a little bit of risk with it because of the news coming out in the next 15 minutes. But we'll see how it pans out. Paid us very well yesterday. I think we made 60-some pips on that one. Let's take a look at the Euro Yen next. How's it going, Yudi? Gold is flying, Jenny says. Let's take a look. Let's get rid of this silver. Gold is flying now. Yeah, I mean, it maybe shorter term. We'll see how it works out. I like gold to the upside for sure. I wanted to cover Euro Yen with you next because it's very interesting to me, the divergence that we're watching here. So I think, if I remember correctly, I either covered this morning in the US session or last night during Asia, but this divergence pattern here, that is of course extended up a little bit higher now. Let me get rid of this zone. This divergence that we're seeing, the rising of price action on the Euro Yen and the falling of the MACD with the stochastic stuffed way up high. I mean, these stochastics are stuffed up in the overbought category up in the upper 90s. And obviously, MACD stochastics are lagging indicators, lagging oscillators. But it is interesting to me how it appears. Now, one of the patterns that I like to trade the least is this expanding megaphone pattern, and we sort of have it here. This expanding or opposing wedge where it's getting wider. The highs are becoming higher than previous highs. The lows are becoming lower than previous lows. However, is it due? Well, nothing's ever really due, in my opinion, for a retracement. What was interesting to me, though, on the Euro Yen was not only the divergence on the shorter term charts, we're seeing it again here. MACD is dropping. This last swing high within the last hour is higher than the previous, and stochastics up high. So the longer term chart that you're on, the more powerful that these trades can become, like divergence or pattern trading, for example. So it's just an interesting play to be selling Euro Yen. Now, the stop is going to have to be up a little bit higher if you're on a daily chart, of course. You're going to have a stop that's, 50 to 80 pips. And then the way that I like to work these trades, if you're into doing this, let me shrink these down a little bit. The way that I like to set these up is take the swing low to the swing high of your divergence, and then have target number 1 be the swing low, 127.57, and then target number 2 will be the 161.8 Fibonacci extension. And that's a long ways away. The trick about divergence trading is you never really know for sure if the top is rolling over until it does start to roll over, and then you have a poorer entry. So the art of trading divergence, and the reason that it's tricky for a lot of people, including myself at times, is trying to pick that top before it rolls over. And that's why with divergence trading, if you're looking at someone, say MyFX book results, usually if the person's a decent divergence trader, you're going to see a lot of losses that are smaller, and you're going to see several trades, maybe even an equal amount that are small winners or break even, but you're going to see that 1 out of 5, 1 out of 10, 1 out of 12 trades that are really big winners. And that's one of the ways that I made, most of my profits over the years, was adding to trades that are winning with a relatively tight stop. Now daily, most of my divergence trading is 15-minute or hourly. But this is a long ways away. I mean, we're talking 600, 700 pips. But you could have the same exact pattern and setup on the 1 minute if you wanted. I just think that on the daily here, it's quite clean. Just fundamentally, it's not appealing, is it? I mean, I still think yen strength could come in, especially if something comes up with North Korea. Who knows for sure. But the euro currently is one of the strongest currencies that we have. So selling it, it's got to put a little sour taste in your mouth, so to speak. So just something to keep an eye on. Something to keep an eye on. So I have a long on gold and a long on the Euro Aussie. We're going to see if this stop touches or not with the news that comes out in the next 6 or 7 minutes. I'm not very interested in the pound dollar at the moment. What do we have here? Oop. Says Swiss yen daily chart head and shoulders clear as day or clear. Yeah, thanks, Yo-Yo. I love head and shoulders patterns. I don't trade Swiss yen, but I love head and shoulders, especially on longer term like that. Very nice. I'm looking 13.15. Mark B, what's up, Mark? Divergence is typical within EXP tries. EXP tries. Yeah, that's a... Oh, expanding triangles. Thanks. I was thinking exponential. I'm thinking all the little acronyms and right on. And it's really nice when you have that expanding angle or that, widening wedge, expanding triangle like we talked about. It's nice to get in on those divergence trade. They're extra powerful and extra, more likely to succeed if you're going with the long-term trend. So the euro-yen divergence is obviously not. All right. Pound dollar. Talk about a messy thing here. We haven't taken a trade on the pound dollar for a long time, for weeks. All of a sudden I look up and like I'm getting suntanned again. Here we go. So pound dollar. Look, the market's trying to tell us something here. There's a lot of uncertainty here with the pound dollar. Obviously, dollar weakness. But oof. I know my chart has shrunk down a little, but if you look left here on the hourly, we're above all this area of technical support now. But we're also stuffed down beneath all this area just a little further of technical resistance. So I think it's pretty easy to see this here. But this zone right here, we have all these wicks coming in from the top and all these wicks coming up from the bottom. And here we are stuffed right in the middle. I'm not that excited about it. And I'm talking swing trading again, I have a shrunk down condensed daily chart up now. And you can see all the consolidation that we've had in this area in the past. You can see it was another area of consolidation and indecision way back in 2016 in the summertime, basically about a year ago. And I'm just not feeling real hot on the pound dollar as far as which way it's going to go. Euro pound, technically speaking, you really can't get much better of a long setup on the euro pound than we have right now. The question that you have to ask yourself is, are you comfortable with a decent sized stop? And if you're wrong, realizing that you bought it at the top. I mean, we have a similar looking pin bar on the euro pound as we did on the euro dollar, But if you look at this dark line here, let me pause my chart here a little. See where this dark line's at, 92.56, 92.60. If I scroll to the left, that's the top from the high wick that we put in October of last year, right? So we're right up at the top. But what's really nice about this trade is this. Let me show you this here. We have broken through with impulsivity. We pulled right back down into support. And now for the last, 6-7 hours, we're sort of rounding up and starting to push up again. And it would be just right on course with how it's happened for weeks. This is break up, retest, push up, and it's just the trend, just straight up. So we're right at a really good point if you want to play this exact same pattern on the euro pound to the upside. All right. If you like euro strength, you just have to decide which way you're going to go about it. Are you going to pose the euro against the Aussie, the euro against the pound, or the euro against the dollar, against the yen? I'm not very clear. I'm not very interested in getting involved with the USD at this time. That's just my own. And I'm talking about swing trades, trades that we go off the hourly chart that we're in for a half a day to a couple days. Shorter term stuff, intraday, 15-minute stuff. There's all sorts of trades, right, that come and go all the time. But to try to pick, a moderately, length swing trade, I think that playing the euro strength is still the way to go. I'm almost certain in the not too distant future, we're going to see the news wires, hitting saying euro takes a breath. Euro gives back some of the gains after the long push up for days and days and days. That's going to come. The question is when, right? I also like to look back at the longer term time frame on the currency pairs to see if the pattern that we're currently in is a pattern that happened prior. And we had a somewhat similar of an arrangement back in 2007 to 2009, where the euro pound pushed up, 1,1400 pips, retraced, and then pushed up to new highs. Here it's pushed up 1,1400, depending on where you want to put the bottom in. So it wouldn't be out of character for this to push up to new highs here. But it's definitely a quite extended move on the euro pound. And what I'm talking through, we got the Aussie news coming out in just a moment, but what I'm talking through now is just the way that I think about things. And you start stacking up these reasons to buy and reasons to sell. Let's see how that news comes out. Then I'll take a look at the chat here in a minute. Again, I'm not going to be surprised if this Aussie news comes out stronger because they set it up so poor. Yeah. So building approvals came in at minus 1.7. So let me show you this here before I toggle over to some more charts. So building approvals came out at minus 1.7. So I'm not going to spend more than 20 seconds on this, but if you think about it real simply, the previous was all the way up at 10.9%. They put the expected at minus 5.4. 15-16% lower. The odds, just mathematical odds, are that the number is going to come out a little better than that bad. And that's exactly what happened. So even though it's a terrible number compared to previous, it's better than they expected, and we might see some strength come into the Australian dollar, at least in the short term. The construction work, that number I'm not that concerned with. Did come out quite big, though. It came out real high, actually. This is the highest that they've had in 6 years, and it looks like the second highest construction work done number that they've had of all time. So, construction industry, okay, obviously. So we'll see what Governor Wheeler says on the New Zealand currency. The New Zealand can absolutely have an effect on the Australian currency. I'm not a master of the New Zealand currency by any means. We can see the new Aussie New Zealand is pushing up to fresh highs here. You can see that pretty easily there. This is the Aussie New Zealand. Couple minutes, 38 points. That's one pair that I don't trade. Hardly ever. Aussie New Zealand. I'm assuming the New Zealand dollar is just getting demolished right now. It has to be. Yeah, Aussie New Zealand is really spewing off some pips here. 50-some pips. For all you lovers of the New Zealand currency. All right, let's take a look at the chat here and see. Jason, I agree with Sean on GU long. Got it. It's almost to be expected. Indicates accumulation, distribution. Right on. UD, Pound CAD I've never looked at. I'm sorry about that. I've never looked at Pound CAD. Jason, how is your view on dollar yen? So let's take a look at dollar yen. Let's see if we can get this pulled up here. So dollar yen is at a really critical level right here. Take a look at the 4-hour time frame and these wicks that are coming across here. We did pierce up a little, but 7, 8, 9 pips. This move up came for one major reason. Risk coming back out of the market. You saw that across the stock markets today. You saw the yens start to weaken, the yen currency start to weaken dramatically. My opinion on it is that this yen weakness is overextended. I am looking for chances to get short on the yen crosses. Let me get rid of this Aussie New Zealand here. One of those crosses could be the euro yen. Now, the pound yen to me is more appealing because it's pretty clear that the euro currency is a lot stronger than the pound. You can see the trend on the euro pound that's been pushing upwards. The dollar, I still feel we're going to continue to roll down on the dollar index. We came right up to the resistance level and pushed down. But with a little more certainty, I like the pound yen. So in one of my other trading accounts, about 2 hours ago, I took the pound yen short, small order. I like the yen. I like the yen strength that could come in here. You all saw how fast it fell with the news out of North Korea. We tracked that yesterday pretty accurately. As it crumbled apart and now came all the way back. But I think it pulled up a little bit too far, in my opinion. Now, there's a lot of you watching that might not feel the same way, and that's okay. That's what makes the market. We all have to have our own opinions. Do I think that we're in a trend reversal pattern on the 4-hour pound yen or the daily? I don't think so. This is the daily pound yen, just the naked candlestick chart. I think there's a lot of room to the downside. We're at 141.90 right now. If you look to the left for technical areas of resistance, we have some here. I'll give you a little better view on this. There's some coming in right on these wicks here that we touched. 142. Sort of a big figure there on the pound yen. I mentioned earlier this morning on the U.S. session that it could be an inverted head and shoulders appearance here even on the pound yen. But even then, 160 pips, I don't think we're going to make it. Obviously, since it's your own money and your own trading, in a nice, caring, professional way, if you want to buy it, that's great. It's not going to hurt my feelings or anything, but I still feel like there's more potential gains to the downside. on the yen crosses. My bias remains unchanged. However, the reason that I can stay in these markets and stick around for all these years as a trader is I don't have any large amounts of my account selling a yen cross right now. Like I mentioned to you, I have a smaller trade in my other account, pound yen short, about 2 hours ago, which is roughly at break even. If you look at the 1 hour candlesticks here, you know, right around the swing high that we put in a few hours ago. My short is somewhere right around in this candle here. I don't have that. Yeah, I'm not logged into that account on my phone here at the moment, but it's right in this last candlestick. I think it's 141.90s, 141.95 or something like that, where I'm short pound yen. And my stop isn't up that high, 25 pips or so. So for me, that's worth it. It sticks with my overall bias. I feel like the pound is a weaker currency than the euro. Not that I don't like the divergence on the euro yen. AU to the moon, Jenny. Yeah, that news. Crazy, huh? The construction news. Waiting for ECB before shorting euro pound. Not a bad idea. KGB are listening. That's funny. Let's see. Right on, Yudi. Let's take a look at Euro Aussie, Jenny. Yeah. That's what we got. 5-minute Euro Aussie. Again, I put that note on my trade idea just maybe 20 minutes before the news came out for anybody who was following the trade idea to watch out for the news that's coming out. I expected, as I covered in the beginning of the stream, the news to come out better than expected out of the Australian dollar for the building approvals because they put the expected so low. But the construction work done, I don't follow that news release at all. And it just happened to be the second highest that they've had in 17 years. So I can't tell you from personal experience how much pull the construction work number has on the Australian currency. Obviously Forex Factory has it listed as a moderate impact. Some other economic calendars might have it listed as a less or more impactful news release. But nonetheless, that's still a lot higher than previous. So I'm looking for the 150.10 area to hold on the Euro Aussie long. That's my goal. The swing highs that we put in previously. And again, since we took about 62 pips off it yesterday, I don't mind that. Obviously, I want to be profitable all the time. I'll keep it sort of magnified here so we can keep an eye on that. Gold is looking good to the upside. But those are my only two trades right now. Obviously not as excited about the Euro Aussie long since that news came out surprisingly strong. But I still like it nonetheless. I only wish I understood the construction news a little bit more. I mean, obviously you can read about it, but it's just not something that I've studied before. I'm just looking through the news feeds now. Reading Wheeler's comments out of New Zealand. I think one of the most important things that that was said, you see the New Zealand dollar took a pretty strong hit here, is Governor Wheeler said that a lower New Zealand dollar is needed to increase tradables, inflation, and help deliver more balanced growth. So this type of statement out of Governor Wheeler's comment out of New Zealand is similar to the statement that I was assuming we would hear from Mario Draghi out of the Jackson Hole Symposium last Friday. That's where my overall bias came from, that type of a statement there. Let's see. Further surge in house prices can't be ruled out as mortgage rates are low. This is out of New Zealand still. In absence of major unanticipated shocks, prospects look promising for continued robust economic growth in New Zealand over the next 2 years. The greatest risk we face at this stage relates to an inflated global asset price and the continuing buildup of global debt. There's a risk of a housing market resurgence if leverage was removed at this time. And that's off my live squawk. I believe that's out of Reuters. So we've seen the New Zealand dollar came under a lot of pressure here, dropped 25, 30 points. And the Aussie New Zealand was the biggest gainer of the group with a swing up of as high as 60 points. And it's sort of fun to see, that's one of the things you have to do is just decide if you like trading or not, to watch how the market reacts on the shorter term chart, like the minute chart, and see, what's going to happen with the currency. So we have this big impulsive move up. Are we going to retrace back down to our Fibonacci levels before rising? A lot of people who do fade the moves, they will use something like that, and they'll try to get long at the 23.6 or the 38.2. It's a little more tricky when there's a speech because there's different types of data that are coming out, similar to Jackson Hole, where you look at the news and it's not just a solid number like we saw out of Australia. All right. And of course, why we had the bigger news up in the Australian New Zealand is because we had strong news out of Australian dollar, and weakening out of the New Zealand currency. So I'm going to give you a little quick summary of what I feel is going to be taking place in the next few hours in the market, just my opinion. I think we're going to see a rise in the price of gold. I think we're going to see some possible downward pressure on some of the yen crosses, like the euro yen, pound yen, dollar yen. We're starting to see a little bit of that now on the pound yen, just a little roll over here. Doesn't mean anything yet, but we're starting to see a little bit of it. And I think we're going to start to see the DXY come back under pressure during the Asian session into the London session. So I think we're going to see the DXY continue to push down. We came back up into the resistance level. So I think this is going to be a good time to reload long if you want to get long on something like the euro dollar, pound dollar, or Aussie dollar. So that's sort of my take on it. I look for yen strength for the pairs to push down. A resurgence in dollar weakness, if you will. So we see a rise in the euro dollar, pound dollar, Aussie dollar, and then a rise in the price of gold or silver overnight here in the States, or during the day if you're on the other side of the globe. Again, euro Aussie trade still going, but obviously thrown off by that surprising number. Our stop here is about 11 pips away or so. I'm going to let that play out, of course. Let's see. Call long, yo-yo 145.60. Nice yo-yo. I love it. Gold has momentum at 1309 to rally. I agree. Mark says our RBA, try to talk down the currency. Exactly. I know it. They do it all the time. So I'm always a little more leery of speeches and talks than I am just hard number figures on news, because, with hard numbers, there's going to be expected releases. There's going to be greater than expected, worse than expected. But when the speeches are there, there's so many sentences and lines that are open for interpretation. And sometimes traders and analysts take a certain line a little bit wrong or take it out of context, and it just gives more volatility to the market. So whenever there's speeches, I'm always a little bit more cautious. So I'm going to leave it at that. And I hope you have a great rest of the trading day, great trading night if you're here in the States. And I will see you in the near future. If I have some other trade ideas, I think I'll post them up. Might be a buy on gold, possibly a short dollar yen, pound yen, euro yen. We'll have to see, because it's I don't think a lot of people like that right now because there's such an impulsive move upwards. But after you've been watching the charts for tens of thousands of hours, you know that that's not anything too rare. So we'll leave it at that for now, and I hope you have a great day. Hope you make profits, be safe in your trading, control your risk, so you can be here to trade with us tomorrow. Take care. Make it a great day.